Charlie Munger's investing wisdom has helped build billions in wealth. He's not just Warren Buffett's right-hand man, he's a financial genius in his own right. Did you know that Charlie Munger's partnership with Buffett has turned $100 into over $2 million over the last 50 years? That's the power of his investing strategies. But here's the shocking part. Most of what Munger teaches goes against what many people think about investing. While others are busy chasing quick profits, Munger's advice is all about being patient, thinking differently, and making smart decisions over time. And believe it or not, this approach has made him and Buffett two of the richest men on the planet. In this video, we'll explore Munger's most powerful tips that could change the way you approach investing. From his belief in mental models to his strategy of going against the crowd, Munger's methods are more than just smart, they're timeless. Stick around and learn how you can apply these strategies to build your own wealth and join the ranks of those who understand the true art of value investing. Chapter 1. The Power of Patience. Why slow and steady wins the race. Munger often emphasizes the importance of patience. In fact, one of his favorite sayings is, "The big money is not in the buying or the selling, but in the waiting." This is a reminder that you don't need to constantly buy and sell stocks to make a profit. Instead, Munger believes in holding quality investments for the long term. Why is patience so crucial? Because the stock market has ups and downs. Trying to time the market is like trying to predict the weather. It's almost impossible to get it right every time. According to a study by the Yale School of Management, long-term investing outperforms short-term trading by a wide margin. Investors who hold stocks for 10 years or more typically see much higher returns compared to those who trade frequently. Munger's long-term approach is backed by data. Over the past 30 years, the S&P 500 has returned an average of 9.8% annually. Investors who stayed the course saw substantial wealth growth, while those who tried to time the market often missed out on the biggest gains. Remember, success in investing doesn't come from chasing quick wins, it comes from waiting for the right opportunity and then being patient. Chapter 2. Mental Models. The secret weapon to smarter investment. Munger is a big believer in mental models. He once said, "To the man with a hammer, everything looks like a nail." In other words, without a diverse set of mental models, your view of the world, and your investments, will be limited. Munger believes that understanding different models from various disciplines, such as economics, psychology, and mathematics, helps you make smarter investment decisions. One of the most powerful models Munger uses is the circle of competence. This means focusing on industries and businesses you truly understand. Trying to invest in things outside your circle of competence is like playing a game without knowing the rules. Munger's advice? Stay within your circle of competence and work to expand it gradually. Another critical model is inversion. In simple terms, inversion means looking at problems backward. Munger often asks himself, what can go wrong? This helps him identify potential risks early. A study by the Harvard Business Review shows that inverted thinking is linked to better problem solving and decision making. Finally, Munger stresses the importance of opportunity cost. This is the idea that every time you make an investment, you are also giving up other potential opportunities. This simple concept can have a profound impact on your investment decisions. If you're not considering what you could be doing with your capital elsewhere, you're probably making the wrong move. Chapter 3. Avoiding the herd. Why contrarian thinking is key to wealth. One of Munger's most powerful insights is the importance of independent thinking. He often speaks about the dangers of following the herd. As he puts it, if you're not a little confused by what's going on, you don't understand it. In other words, if everyone else is making the same decision, it's likely that they're missing something. Munger warns about the herd mentality in investing. When everyone rushes to buy a stock because it's popular, they often overlook its underlying value. This is when bubbles form, as we saw during the dot-com crash in the late 1990s. When investors focus too much on what others are doing, they can miss out on opportunities or even lose money. Being a contrarian doesn't mean being negative or skeptical of everything. It's about questioning the status quo and thinking critically. For example, when most people were abandoning Berkshire Hathaway in the early 2000s, Munger and Buffett saw an opportunity. They understood that the market was overreacting, and they used that to their advantage. Munger's approach to contrarian thinking is supported by research from the University of California, Berkeley. Their studies found that investors who made decisions independent of the crowd often outperformed those who simply followed market trends. In fact, contrarian investors tend to spot undervalued stocks before others even notice them. If you're enjoying this video and these insights, don't forget to hit that subscribe button. It'll keep you up to date with more valuable content like this, straight from the minds of some of the world's most successful investors. Chapter 4. The Compound Effect. Small Wins, Big Returns. Munger has always been a huge fan of compounding. He once said, "The first rule of compounding is to never interrupt it unnecessarily." This is because compounding works best when you let it do its magic over time. The more time your money has to grow, the bigger the impact it will have. Think about this. If you invested $10,000 in the S&P 500 30 years ago, today that $10,000 would be worth more than $150,000. That's the power of compounding. Even small, consistent gains add up over time, and when they compound, they grow exponentially. Munger also reminds us that patience plays a crucial role here. The best investors aren't the ones who make the most trades, they're the ones who let their investments compound and grow without interference. The key is to invest in quality assets that will continue to grow over time, and then let compounding work its magic. Chapter 5. Focus on quality, not quantity. The art of finding winning stocks. Munger often stresses the importance of focusing on quality over quantity. Too many investors believe that the key to success is diversifying into a large number of stocks. But Munger believes that it's better to focus on a few high-quality companies rather than trying to spread yourself too thin. He calls this strategy concentrated investing. Instead of owning hundreds of stocks, Munger suggests focusing on companies with strong fundamentals, solid management, and a durable competitive advantage. These are the companies that are most likely to continue growing and providing consistent returns over the long term. Munger's approach has worked wonders for him and Buffett. In fact, Berkshire Hathaway's success can be attributed to their ability to pick a small number of winning stocks and hold them for decades. By focusing on quality, you're not only reducing risk but also increasing the likelihood of significant returns. Chapter 6. Learning from mistakes. Turning setbacks into investment gold. No one is perfect, not even Charlie Munger. He's made mistakes along the way, but the key to his success is learning from those mistakes. As he says, it's not supposed to be easy. Anyone who finds it easy is stupid. Munger's ability to reflect on his mistakes and turn them into learning opportunities is a crucial part of his investing philosophy. Instead of letting failure discourage him, he uses it to refine his approach. One example is his early investment in the American Express scandal, which he considered a costly mistake. But instead of letting it ruin him, Munger learned to better analyze a company's management before making a decision. Failure isn't the end, it's just another step toward mastering the art of investing. Every mistake provides a valuable lesson, and Munger's ability to learn from those setbacks has been key to his success. If you found these lessons useful, don't forget to subscribe. You won't want to miss out on the wealth of knowledge that's coming your way. Charlie Munger's investing strategies have stood the test of time because they're rooted in common sense and patience. By applying these principles, being patient, using mental models, thinking independently, focusing on quality, and learning from your mistakes, you can set yourself up for financial success. If you follow Munger's advice, you're not just investing your money, you're investing in your future.